we've got a big change in sentiment towards U.S. markets today on hawkish Fed minutes. The Fed minutes from the April meeting came out, and there's been a lot of commentary in there about what they might do in June. In particular, a number of the Fed members, in fact, most of the Fed members, seem to be in favor of a June rate hike should the U.S. economy continue to chug along. Since the meeting, we've had the strong retail sales report, strong industrial production, employment was fairly reasonable, and inflation is continuing to creep up. The street has been increasingly coming around today to the prospect of a Fed rate hike in June, and it's had a significant impact on market action. Trading on Thursday could be influenced again. We have speeches coming from Fed Vice Chair Stanley Fischer, as well as New York Fed President Dudley. Those are two of the big three at the Fed. Earlier speakers this week are non-voters. These are two of the big ones. It'll give us a really good clue as to which way the Fed is thinking now, with the next meeting a little under a month out. So that's important today over the next couple of days. U.S. dollar index. Look at this. 2 o'clock p.m. As soon as the minutes came out, spike continued to trend higher. We'd already seen the dollar index breaking out of a downtrend. Renewed interest in U.S. dollar. Look at this pickup in momentum. RSI acting really well, and generally trending higher from here. What has this done for currency markets? Let's look at the U.S. dollar pairs. Pretty much across the board, big jumps. Look at this. Here's the dollar yen. Breaks out over 110, testing its 50-day moving average. Fibonacci here near 110.50. There's the breakout up over $1.10. We have it rallying against the Canadian dollar as well. This is going to be a pretty similar theme there, continuing to gain. And in fact, look at this, a breakout over 130 against the Canadian dollar. Moving on down here, we have, for example, the Singapore dollar. We also have U.S. dollar breaking out today. Look at that, exploding to the upside. Coming down here, Aussie dollar. Again, picking up here. And that's against the Australian dollar and against the New Zealand dollar. These are 1% plus gains. We're talking big figure moves for the, and look at this one picking up as well. But we're looking at big figure moves for the dollar. Where one currency though that hasn't that we are keeping an eye on is sterling. There was a pickup in sterling today off of a poll that showed the Remain camp taking a lead, but all the same, we are seeing even those gains starting to ease back in the face of a strong U.S. dollar today. And when we look at the euro, we also see euro dollar weakening, and look at this big plunge in euro as the U.S. dollar rally. This rally, by the way, is not just contained to currencies; it's also contained to it's also expanding into metals and into stocks as well. Look at gold, same thing. Fell off the table as soon as those minutes came out. Kaboom! And one other thing to note: people have talked a lot about the bond prices and bonds not factoring in any cut. As recently as last week, the bond market was figuring about a 5% chance of a June rate hike. This morning, it was up to about 16%. Now it's up to 30. So the markets have come around really quickly to the idea that we could get a rate hike coming this month, coming in June. So continuing here, gold has plunged from 1276 to 1256. Next support for gold, 50-day average in and around 1250, and then Fibonacci test in and around 1228. Finally, I'm just going to highlight U.S. stocks here. Let's start with the U.S. 30. Important here, U.S. 30 that is breaking a head and shoulders top completion. It already broke the rising neckline. It's broken a flat neckline. 17,500 has been taken out, and it's starting to work its way lower. And look at this here in the RSI. Momentum rollover, negative divergence, dips under 50, takes it once, dips under 50, retests it. This is a bearish RSI pointing lower on momentum. Next potential support, 17,120 near the 200-day moving average, 38% retracement of the previous uptrend. One last chart to show. We have the S&P 500. And it is testing support at 2040, where if this breaks, you would see the completion of a head and shoulders top in the S&P 500 as well. Same momentum as the US 30, with this 50 becoming new resistance, telling me momentum's turning downward here. We break this 2040, you could come down to 2000. Round number, Fibonacci test, 38% retracement could be drawn back to this on a breakdown. So we've had a major shift in sentiment today in the United States towards what the Fed's going to do. People are now looking much more seriously at a June rate hike and a more hawkish Fed going forward.